Welcome back to the channel, guys. Before we get into the individual setups, let's start with a broader market because once again, the macro picture gave us the roadmap. And right now, that roadmap is still doing exactly what we laid out in the last video. Starting with SPX, last video I told you a 6630 was the level that mattered, not a vague area, not some random zone, a real level that needed to break if this market was going to repair itself and push higher. That break happened, and once it happened, the move into the 6800 zone area was not surprising at all. It was the logical next step. That is what clean structure looks like. Now, as long as SPX continues to hold above the 6630 breakout zone, the fear that was hanging over this market should keep fading and the path of least resistance remains higher. That does not mean straight up every day. It just means that the market has done the hard part already. It reclaimed the important level and now the burden shifts to the bears. Now look at IWM. This one was just as important to me because if small caps are not participating, I do not fully trust the move, but that is not the issue right now. IWM pushed through the key 252 area, reclaimed that zone, and now we're printing above 261. And that is exactly what you want to see. This tells you risk appetite is still alive. It tells you traders are willing to rotate into names with more upside potential. And when SPX is constructive and IWM is confirming, that is usually when selective momentum names can really start to open up. Now let's talk about oil because this is where the tone shifts. In the last video, I said USO was getting too extended and that this move was becoming vulnerable to a headline-driven reset. And that is exactly what we got. You can see from the headline flow that geopolitical developments hit the tape hard, including the Trump post recap tied to the Iran nuclear standoff and naval blockade language that just came out today, and then the follow commentary around Iran's supreme leader. Now, whether traders agree with the politics or not is irrelevant. Price reacts to uncertainty first, and that uncertainty immediately changed up the oil setup. Now, throughout the week, we went from the overheated move in the 140s to a sharp unwind back toward the low 120s. That is why chasing extended commodity names after panic headlines is usually a terrible idea. Now, from here, USO stays tricky. If escalation grows, oil can squeeze again fast. If the situation cools down in any way, the overextension continues to unwind, which is more likely to happen at this point. So for me, this is not a clean, blind chase area anymore. This is a headline sensitive chart, and that means you either stay nimble or you stay out. And while all of that was unfolding, we already had the right name on the board, SKYQ, SKYQ. This was one of the cleaner alerts I put out, and the chart tells the whole story. I caught the 288 break early, laid out the targets, kept the stops tight, and the move expanded hard from there. What a multi-day run this has been. From the original alert, this thing ran over 400% at its peak. This is not just a random momentum, that is preparation meeting execution. And the reason it all worked so well is because the structure was already there before the crowd noticed it. If you remember, I did emphasize 2 to 7 day swings on these names and nothing more, and we met our targets within that time frame. So you had the compression, you had the improving trend, and you had the breakout level, and once it all cleared, it went into full expansion, and that is exactly the kind of move I look for. Now let's move into the current names where the next opportunities may be developing. First up, AIXI. This one was a clean move this week. What an amazing breakout expansion this has been so far. This one has already proven it can move in a serious way, nailed the expansion phase early from the lows, and the overall move turned into an absolute monster. Now, after that kind of run, what matters is not chasing the old move. What matters is whether a chart is building the next one. And right here, AIXI is sitting at a real decision point. You can see the demand zone underneath price. You can see the multi-time frame EMA support converging. And you can see that despite the pullback, the higher low structure is still alive for now. That makes this a textbook hold or fail area. If buyers defend the zone with real intent, then the next leg can build from here. If the support breaks cleanly, then you do not force it. Very simple. This is how strong setups are traded, not emotionally, but structurally. Next up is UCAR, UCAR. This chart is one of the more interesting ones because it is not just one breakout, it is a sequence. You can literally see the first expansion, then the second, then the third, and now the chart is trying to set up what could become the fourth expansion leg. Now, that matters because when a name repeatedly proves it can expand, pull back, and control, hold support, and go again, that is when you start paying very close attention to it. Right now, UCAR is sitting on a multi-time frame EMA support in a very important area. That support zone is the line between continuation and failure. If it holds, the chart still has real upside potential. If it loses that structure in any way, then the chart expansion sequence pauses. So this is just another one where patience matters. The edge is not in predicting, but the edge really resides in recognizing when the structure confirms, and AIXI and UCR will be prime day trade opportunities going into this week. Now, let's cover DKI real quick. This one was a very clean example of how we handled runners. Fresh highs came in real quick after the breakout I mentioned. The chart respected the structure, and instead of sitting there hoping for infinity, we managed it properly by booking partial gains into strength, reducing risk, and letting the runners do their job. That turned into a clean day trade overall. That is important because a lot of people talk about catching runners, but they never talk about how the trade was managed once it started working. Execution matters just as much as the entry, and DKI was a perfect example of process over emotion. Then there's CLIK. This one is a little bit different. It is not the loudest chart on the board, but it is tightening in a way that gets my attention. You can see the trend line pressure building here. You can see the support from the moving averages, and you can see that the price keeps trying to build higher without completely falling apart. Those are usually the names you keep on watch for multi-day runs because when a chart stays coiled like this and keeps respecting structure, sometimes the move does not look obvious until the moment is already underway. So CLIK is one of those names where I want to keep seeing clean consolidation and the lower time frames, continued support and confirmation through price. So to sum it up, SPX remains constructive above 6630. IWM continues confirming risk appetite above the key breakout zone, and USO is now a headline driven chart and needs to be treated with caution. And names like AIXI, UCAR, CLIK, and the kind of moves we already saw on SKYQ and DKI are exactly why selective momentum still matters a lot in this market. We're not clearly out of the woods yet, guys, so stay cautious and stay selective in what you're picking out. Now, you do not need 20 setups a day. You need a few real ones. You need structure with that and just a bit of confirmation where risk management is clearly defined. And when the market actually gives you an expansion on a play you're in, you need to know how to actually hold on to that winner. That is the game. Appreciate you guys watching, guys. Welcome to Redvale. This has been the Breakout Zone, and I'll see you guys in the next one.